It is time now for your Sunday Money. Now, according to surveys, adults in the U.S. have used the same checking account for 16 years on average, and 40% of all Americans have never switched banks at all. But is loyalty really what's best for you and your money? Luckily, we have certified financial planner Suzanne Himes here to discuss what you think about when choosing a financial institution or maybe changing to a different one out there. And there's a couple different options available. We're going to break those down first.
Exactly. So, in really first, we want to think about what are our financial needs and what are our banking habits. That's really important. So 3 broad types of financial institutions. We want to think about traditional banks, which are the national big banks or community banks. We've got credit unions, which are the local not-for-profit institutions that are actually owned by their members, the account holders. And then we've got online-only banks with no physical branches, of course. And so from there, we want to think about the differentiators among those. So, think about products and services they offer, think about their interest rates and fees, and then convenience factors.
And obviously each person is going to be different. What you are using a bank for? Are you going to be using a credit card, a loan? What is your reason for going after one of those?
Exactly. So perfect. So the first thing is, thinking about what are the services or products that you think you might be needing. So are you in the market for a mortgage or a car loan or other personal loan? Do you have a situation where you occasionally want to have cashier's checks or teller's checks? Obviously you need a physical branch for that. And then, so products and services. And then thinking about interest rates and fees. Obviously costs are always important to everything that we think about with our money. So, first, what's the interest rate that you're going to receive on your deposits, your savings? Then what are the interest rates that you might potentially be charged if you do need to borrow money? And then finally, it's just really important to think about, what are the overall, account fees that might be charged. There could be some ongoing monthly fees. And oftentimes it's just important to ask the question, because even though there might be that monthly fee, then it might be waived, for example, if you set up direct deposit. So just really important questions to ask.
A lot to break down, and especially, if you maybe choose a smaller bank that might have a better competitive rate for a mortgage, might not have an app or a drive-through window, so it's like the convenience factors as well.
Exactly. And that's really the kind of piece that can pull all that together. So what are your particular needs? Do you travel a lot and you want to have access to branches, ATMs, in a big network? Do you want a one-stop shop for not only your personal banking needs, but also a business, perhaps? That's really important. And so just thinking about what's your personal situation, because there isn't perhaps one right answer for everyone. And it's possible that you could need more than one institution to meet all those needs.
You can do 2 different ones.
Exactly.
All right, Suzanne, great stuff. Thank you. Really quickly, what is our fast market fact for today?
So today, thinking about, again, bank rates and fees, interest rates, we're going to take a look at what the recent national averages are for those. There's quite a range, as we can see here. And the big takeaway is that we're going to earn a lot less on what we're depositing than we might be charged if we're borrowing. So you can see there quite a big range, and again, these are national averages. So
take those into mind for sure. Suzanne, thank you.